I'd like to thank you all very much for coming today. As the finance minister said, there's been some very good progress in Japanese corporate governance. One of the issues on which progress is made in the past year is the issue of so-called sodanyaku. As you all know, these are retired chief executives or CEOs who, after retirement, kind of hang around in the background and continue to boss everybody around. So although I should be a champion of good governance, I am very delighted that CJEB will have its own sodanyaku going forward. I'd like to thank all of our corporate sponsors, and I would like to thank very much Professor Patrick for giving me the opportunity to organize this panel, but also for, more importantly, being my mentor and model for my whole adult life. So thank you very much. I launched this project with an aim to drawing attention to the best practices both in the United States, Europe, UK, and Japan. It's clear that this new code is the critical element for the revitalization of the Japanese economy. When the codes were first launched, I was a bit disturbed because it seemed like there was an assumption that the goal was to more or less adopt the US system right off the shelf into this country, and I think that would be a mistake. The US system is not perfect. It hasn't done a very good job in preventing fraud and abuse, nor has it done a very good job in allocating capital. Let me give you two examples. The most obvious one is excessive CEO pay. And the second is, for example, the failure for us to find a commercial solution to climate change. So the US system is coming under criticism for being too short-term and too shareholder-focused at the expense of the long-term and other stakeholders. Japan's in the opposite situation. Japanese companies have to become more accountable to shareholders and less concerned with other stakeholders. But in some ways, I still worry about Japan blindly accepting Western practices. Japan's, I think, in danger of drifting towards some of the weaknesses of the United States system. And in particular, I worry about this over-reliance on independent directors at the expense of active oversight by shareholders. In other words, it seems that Japanese companies are in a hurry to appoint all these kinds of independent directors and say, okay, we're done. No need to look here anymore. The first stage of corporate governance reform in Japan, it seemed to me, was this rush, this mad rush to quickly hire independent directors, to reform the company's legal structure, set up new committees, and so on and so on. And at this point, while this was happening, I think there was a frequent criticism that Japanese companies were just ticking the box and not really embracing the spirit of the reforms, but I'm not sure that's really fair. In just a few short years, there is near 90% compliance with the code of listed companies, and that required a lot of rebuilding and reorganization. Companies had to focus all their energy on just complying with the codes, and we're now at the point where it's time to think about how to use these changes to affect the long-term strategy of the company, how to use these new changes, to create a new strategy. So we're now at a very critical stage, a second stage, and Japan will either find a way to protect some of the best traditions of Japanese corporate organization in which the community is sort of protected and sustained while still opening up to greater accountability to shareholders and to embracing the disruption that comes with change and creation. So the second stage of this evolution requires partnership with investors. And the reason I organized this panel is because I think because this is a sort of new concept, it seems that there are a lot of companies that are afraid of talking to investors or afraid of the motives of investors and kind of don't understand who are these people from outside to come in here and ask us these questions and telling us what to do. But again, the long-term progress of corporate governance is going to depend on a dialogue with investors. The CEO of Mr. Era's company, the CEO of BlackRock, has said that if fund managers are going to focus on benefiting shareholders instead of wasting time and money in fights at the annual shareholders meetings, then engagement has to be a year-round, constant conversation about improving long-term value. So this is not just an issue for Japan, it's a global priority. And again, I put this panel together in hopes that many of you out here are executives of Japanese companies to hear what these people want from you or why they speak to you the way they do. So we're going to hear from our panel about the issues that are most important to them. There are issues that are important in the US and the UK that I thought might be interesting to compare. CEO compensation remains the key issue. In Japan, executive pay is an issue, but here the issue is how to create incentives that best align the interest of shareholders and management, which usually means higher levels of pay for Japanese CEOs. I'm not going to go through this list. ESG is an issue everywhere. In Japan, the focus is usually on the G because Japanese companies are doing a pretty good job on the E. Diversity is a challenge everywhere. In Japan, the definition is very narrow, which means the bar for success is lower. What are the key issues for Japan, for shareholders in Japan? Again, I chose these guys because they're all very diverse styles. Some live to challenge managements. I'll let you figure out which one is which. Some guys live to challenge managements. Others look for a friendly partnership. Some guys here manage huge portfolios, so they have to choose which companies to engage with. But everybody's after the same goal, which is to improve the long-term sustainability and efficiency of the companies. It's difficult to generalize what they're asking for, but this is a list put together by the International Corporate Governance Network, which I chose because it represents asset managers from all over the world, including major Japanese asset managers. So this is the agenda that our CEO, who sits on the FSA panel of experts, has identified these issues as the keys for Japan. It's interesting for me that one of the key issues is that the idea that managers should have to account for the use of the shareholders' capital and should have to talk about their cost of capital. I think this reflects also how the role of the CFO in Japan is not as strong as it needs to be yet. I'm sorry, I'm trying to rush. I'm just going to conclude quickly by saying there are a number of tools that investors use to communicate with companies. The most obvious is meetings. And you go to a meeting, who do you meet? Do you bring a plan, a long, detailed plan for some kind of operation you want the company to undertake? Do you just simply, not just simply, but in an important way, make sure that everything is all right at the company, everything's going well? Do you write letters? Some companies are not so friendly to see shareholders, to meet with shareholders. So letters to suggest a proposal is a very important thing. Voting is, of course, very important at the annual shareholders meeting. Going to the annual shareholders meeting is a very important thing for all investors, and I think that's not often well understood by Japanese companies. They think people show up to disrupt the meeting, but in many cases, it's important to witness what's going on, what are the concerns of retail investors and other investors. Shareholder proposals is a strong way of communication. It's usually an indication that maybe communication hasn't been going so well. And then, of course, the most aggressive ways are public campaigns, websites put up to try to communicate a shareholder's point of view to the general public. And most aggressively, I suppose, is to call an extraordinary meeting, which is a power that is available to Japanese shareholders, but not too many other countries in the world. I should add, because it's in everybody's mind here, I think, one of the other key issues is there's been a big debate in this country about the potential for companies which have a listed subsidiary on the stock exchange. So parent company and subsidiary company both listed, leaves open the possibility that minority shareholders will be abused. And you've seen some cases like Panasonic and Panahome and Alps and Alpine. But I think the big elephant in the room this morning, particularly this afternoon, is Renault and Nissan. So with that, I'm going to turn it over to my panelists. I'm not going to read you their bios because we're short on time, and the bios are so distinguished, they go on for a long while. But please look at them. I'm just going to introduce them by name. Here's Mr. Drew Edwards from Usonian, Mr. Era from BlackRock, I couldn't see you, Mr. Maruki from Strategic Capital, and Mr. Sampei from Fidelity. So I'm going to ask each of them to just talk about how they approach shareholders for a few minutes. I'm going to ask them some questions, and then we'll open up to the floor, and hopefully we'll have time for some good discussion. So may I turn it over to you, Drew? You can sit down, or you can come here, whatever you like.
Upstairs, that's okay.
Okay, fine.
Hi, I'm Drew Edwards. First, I'd love to thank Alicia and Columbia Business School and CJEB for kindly having me join today. It's an honor to be here. Again, I'm Drew Edwards from Usonian Investments. Usonian is a, so I can use this here, yeah. We're a Japan equities focused firm. We've been doing engagement style investing in Japan for a little over 15 years. In our prior organizations, we were previously, a subset of our team was previously in a firm called Taiyo Pacific Partners, which was early on in the corporate governance friendly activist space in Japan. And a subset of our team was at a value shop called Advisory Research in Chicago that also had a Japan engagement strategy. We spun out of Advisory Research in 2017 through an MBO and set up Usonian. Today we're managing a little over $1 billion in investments only in Japan out of our offices in Tokyo and in Chicago. Our clients are primarily endowments and foundations, each of which are pursuing their own phenomenal causes, as well as pensions on behalf of teachers, for example. We have a distinct value orientation to our investing. We regularly engage with our management teams with the hope of influencing investment outcomes. So our approach to investing and management engagement is with the mindset of that of a long-term owner. We have regular ongoing dialogues with management, perhaps as you might expect of a private equity owner of a private company. We proactively exchange ideas in private, and then generally we believe that proactive private exchange of ideas is generally the most productive. That said, occasionally, and unfortunately, surprises do happen. And in such cases, with unusual occasions when management surprisingly does something that we view as either counterproductive or against the best interests of minority shareholders, we believe it's necessary to be a bit more assertive rather than silently walking away. And that said, I understand why shareholders don't always do that. It is time-consuming, it's expensive. But that said, it's our view that silently selling and walking away will only encourage the activity to continue and cause the market to remain undervalued. So we believe that on certain occasions it's important to be more assertive, and that. But I want to emphasize that's very rare and uncommon. And encouragingly, I would highlight that the regulators are doing more to address such matters with the Fair M&A study group, for example, is recently led by METI. Again, we follow a very distinct value-oriented approach to investing. The companies that we invest in, they're cheap for a reason. And what we try to do is identify the cause of the cheapness on the way in, and we try to work with management on strategies to remedy whatever we think that cause is. So the most common buckets that we identify are either asset inefficiency, operational inefficiencies, and corporate governance issues. In the case of asset inefficiencies, it's the most common reason for discount in our estimation. Management, in many cases we invest in, the companies aren't putting the assets to best economic use. That is often in the case of latent financial assets, such as alliance shareholding, excess cash, and we engage with management on ways in which the capital could be, in our mind, put to better use. We also, in many cases, our companies have a lot of intellectual property assets that we think are being underutilized, and we work with management on strategies to better deploy intellectual properties, such as when we find many cases competitors are infringing upon the company's patents, and we try to work with management on ways to assert their patent rights or other strategies in order to monetize intellectual property. Another example. We also engage on strategic and operational topics. We express our views on the company's strategy. We spend a lot of time investing in markets outside of Japan as well. There are occasions in which we can introduce international alliance partners, for example, or even on occasion acquisition potential targets. And we talk with management teams about our view on how resources can be shifted from low value added to higher value added business opportunities. And then finally, on the corporate governance front, oftentimes companies trade at a discount in our estimation because of corporate governance issues, and we do work with our management teams on, for example, eliminating poison pills, or occasionally introducing director candidates that we think could enhance the skill set of a board. I will stop there and save time for the dialogue.
Just before we move on, I just want to ask you if you could elaborate. When you say you meet with management, do you have free access to everybody you need to meet? Do you meet the CEO? Do you meet internal directors, external directors?
It depends on the situation. To start with, I'll say back in the day, it was occasionally difficult to get a management meeting at all. I cannot remember the last time that happened. We have always been able to meet management. Occasionally we would like to meet the independent non-executive director if we can, and we don't always get access to the external directors. Sometimes we do, sometimes we don't. We don't always get access to the CEO in the beginning, but we're long-term holders, so ultimately over time we do get access to the CEO.
It's good to hear. Eda-san, may I turn it over to you?
Sure. Okay, my name is Akitsugu, and I'm from BlackRock. Thank you for having me today. It's a great honor. Just a brief introduction, I guess. Sorry, not on the slides, but who is BlackRock? We are an investment management firm. We're actually listed in the U.S. Our asset under management is about $6 trillion over. And we have a very diverse offering in terms of our investment strategies. So we have a bulk of our investment strategy is mainly passive, but we also do have active funds. So we have a very wide range of investment strategies, but again, in terms of the portion, we are a passive house. What I do at BlackRock, I'm head of the investment stewardship team in Japan, and globally, the investment stewardship team is responsible for engaging in proxy voting for our investee companies. And just to give you a broad image of the activities, globally, we vote around 170,000 meetings per year. And in Japan, we meet about 2,400 shareholder meetings per year. Now is the concentrated season, so I don't have a life over the next month, unfortunately. In terms of the engagement, our team meets around 2,000 companies globally. In Japan, I'll show you the slides later, but we meet about 300 companies in Japan. The concept of our team, as in the slide, is to have a team presence locally. So we think engagement and proxy voting requires a knowledge of how the market works, how the law works. You have to have access to all the people in the market to make your engagements more influential and meaningful. So we try to have a local presence in every market. And the people, the team who are located in each market, for example, in Japan, all the investments that BlackRock Group has in terms of Japanese companies, the proxy voting and engagement is actually done by the Tokyo team. So as similar structure, all our investments in U.S. companies, whether our Japanese clients are investing in U.S. companies, those proxy voting and engagement is taken care of by our team in New York. Again, we invest in a lot of companies because we're passive, and also we meet a lot of companies. So it's very important to focus and identify companies we would be engaging with. And this is just a very broad image of how we choose our companies who we engage with. Basically, we look at the probability for change, the significance of the issue, and of course the size of our holdings that our client has in that company. So we look at the focused, sort of expected impact of our engagements and the likelihood of us influencing and delivering outcomes in terms of our engagement. Of course, a lot of our engagements is not just to focus on sort of making change, but large of it is to develop mutual understanding between the company and investors so that we can, have a sort of a common bridge to, achieve a better understanding of each other, and also to build up a trust that would lead to potential very influential engagements. Just to give you a broad figure of activities in Japan, as I mentioned, we're meeting around 300 companies this year, and these stats show you that our number of meetings and also the number of companies we're meeting with in terms of Japanese companies are actually increasing year by year. I actually joined BlackRock in 2011, and at the time, the number of companies we were meeting with was around 50 companies. The number of meetings was around 80. So over the 8 years, our number of meetings have more than quadrupled. It's also that our team has expanded from 2 to 6 now. This actually has a very high impact. So we're now the coverage of our engagement for companies in the topics is has exceeded over half. The top priority engagements in Japan, and also if you look at the left-hand side, the long-term, we focus on the long-term strategy, the quality and quantity of human capital, corporate governance, and climate change disclosure and risks. That left-hand side, we call it the bucket, but is actually very common globally. And we have a sort of a global framework that we would prioritize on these topics that has an impact on how the company would operate on the long-term in the long term, and which would have issues that would have an impact on the success of the long-term sustainability of the companies. And on the left side, the topics is actually developed independently in each markets. And the list of the topics that I brought you today is on Japan. And in terms of the long-term strategy, and I'm happy to elaborate further in the Q&A session or the panel discussion further, but one key topic we discuss often is the portfolio, the business portfolio, and how the management is allocating capital efficiently in the best interest of the shareholders. A lot of the Japanese of course not all, but the commonality of the Japanese company's business is often quite diverse. So one company could have a very profitable, high-growth business, but also they could have a non-performing and a non-growing business within the same company. So we want to understand why the company or the management is actually developing that portfolio strategy, what the management is thinking about in terms of the non-core assets. And it's our job not to tell the company what to do, but it's actually us. I think we have a role to ask the questions and try to understand where the management is coming from. And if the management can respond with a very convincing answer, I think it's our role to support that management. But on the other hand, if the management does not provide a very convincing answer, I think it's our role to sort of challenge, in a way, the company or the management. And if that situation still continues, we may consider a vote against those managements. Another unique topic in Japan, of course, is the human capital. As all of you know, the demographic here is also a challenge. So we have a scarcity of labor, which how the company actually enhances their productivity, or how the company develops a business model which overcomes that sort of labor scarcity issue is a very important topic. So these topic which would sort of impact the long-term success of the company is something we do often raise with the corporates. Of course, corporate governance, it is our very favorite topic. And some of the things we do ask is, of course, the board effectiveness. We prioritize not the structure, but the substance. We want to ask the board how they are discussing the long-term strategy and how are they monitoring the discussions and how are they sort of shifting how the corporate managers behave in a way. The succession planning of CEOs, this is very important, particularly for long-tenured CEOs. We also want to understand how the company and the board is taking responsibility and leadership in growing the next group of senior leadership who will be the pool of the CEOs going forward. And not, in terms of the climate change, this is also becoming much more important as regulation continues to become more strict in a lot of the industries. We want to understand how the company is investing in technology, but how companies are also shifting their business models in order to overcome and understand and cope with the regulatory changes, which would have a profound impact on how the company would perform in the future. So overall, that would be my introduction, and I'm happy to cover all any topics in the further discussion.
Great. When we come back to the questions, I'd love to ask both you and Sampei-san, you have special issues given that you're a passive fund and you theoretically cannot sell, but we'll get back to that, I hope, later. Maruki-san.
ストラテジックキャピタルマルキと申します。私は日本語でやらせていただきます。このような席に呼んでいただいて本当に光栄であります。私は他の皆さんと違って非常に規模の小さいファンドマネジメントをやっている小さい会社ですので、ただここに呼んでいただいたのはおそらく我々の投資戦略がちょっと他と違うということで呼んでいただけたと思いますので、そこを中心にお話をしたいと思っています。で、どんな株主になって投資をしてどんな提案を経営者にするのかということをまず載っけておりますけれども、アクティビストとしてと書いてありますが、アクティビストっていうのは日本語ですと物言う株主というふうに訳されるんですけれども、何が違うか、他の投資家さんと。私の定義はですね、大きく2つあるんですね。一つはですね、株主に与えられている法律上の権利は行使することがあるとか、結構行使すると。他の投資運用業者さんはしないと思います。でもう一つはですね、面と向かって意見をはっきり言うということであります。で、他の運用業者さんもおっしゃってると思うんですけれども、私の場合は時として無礼だと言われるようなことも言います。社長さん、あなた公開して7年経つけれども株価は上がってないですねと、株主価値は向上できませんでしたねと、お代わりになったらどうでしょうかと、僕は面談で面と向かって机の向こうにいる社長さんに言います。株主総会でも言います。何百人か何十人の他の株主さんの前でも似たようなことを言います。でそれが他の投資家さんと違うところだと思います。やっぱりはっきり言わないと伝わらないですよ。例えば配当の話をするのでもね、配当についてどのようなお考えですかって聞いて、その会社を訪問してですね、帰り道にケチくさい経営者だったなってブツブツ言いながら帰るんじゃなくてね、配当成功は 100% にすべきじゃないですかっていうふうに僕は正面から言うし、場合によっては 150% でもいいんじゃないかと思うときはそういうふうに言います。というのが、すみません、アクティビストの私の考え方でありますが、でただ私どもは事業の専門家ではありませんので、そこに書いてありますとおり、コーポレートガバナンスとか経営の改善についていろんな意見を言います。こうしたらどうか、ああしたらどうか。それからバランスシートの改善について言います。ですからビジネスの専門家ではないので、ただそれでもはっきり分かることがあります。この部門、この子会社はもうやめた方がいいんじゃない、売った方がいいんじゃないということはもちろん言います。それからどんだけやってもビジネスの利益率が上がらないといろんな議論を経営者さんとしてもね。ということはその部門の設備をマークダウンしなきゃいけない、減損しなきゃいけないんじゃないかと、そんなことを言うこともあります。で当然不要な資産、持ち合いの株とか不動産は売ってほしい。一番下に書いてある通り、 自社株買い増配をしてほしい。で M&A とか資本業務提携もどんどんやってもらったらいいと思いますが、日本の企業は高い買い物をしがちであると。自分の会社の株価のバリエーションより高いところを買いがちなので、大体買うと自分の会社の企業価値を毀損するようなケースが、結構見受けられますね。で、一つだけちょっと申し上げたいのは、買収防衛策の廃止っていうのを、私、かなりいつも言うんですけど、企業の皆さん、買収防衛策を導入すると、うるさい株主は来なくなるんじゃないかと思っていると思いますが、私、逆でしてですね、こういう会社、投資するのは好きです。どうしてかというとね、買収防衛策を導入しているっていうのは、買収されたくないわけですよね、経営者の皆さん。で、自分とこの会社の株価が安いと告白しているようなもんですから、僕たちスクリーニングで買収防衛策導入している企業をスクリーニングしますよ。でもちろん必ず投資するとは限らないけれども、そういう考え方でやっぱり廃止した方がいいと思います。で、我々どのような経営者と対応していくかということについてお話したいと思います。で、最初は当然面談をお願いして、トップマネジメントの面談をお願いして、個別のミーティングをやって、でいろんなこういうコーポレートガバナンスのこういうところをこういうふうに変えたらどうかとか、配当政策こう変えたらどうだとかいろんなことを提案をします。で1年ぐらいやりますね、そういうことをね。でそれでもなかなか受け入れていただけなかった場合は、そこに書いてあるように手紙を書くし、株主提案もするし、株主提案をしたら必ず株主名簿をもらうし、株主提案をしたら必ず株主総会の後に議決権行使書の閲覧投資をします。他の株主がどういう議決行使をしたのか必ず見ます。それから去年からちょっと試しにやってみたんですけど、新聞のちょっとスペース買って広告出してですね、日経の3分の1面ぐらい買ってですね、それから今年の初めからやってるんですけど、投資先企業ごとの個別のウェブサイトを作ったりですね、その投資先企業ごとにですね、私たちがどういう課題がこの会社にあるのかということをウェブサイトで発信したり、で株主提案をしたらその株主提案の内容を出したりしています。それから左側に書いてありますが、もちろん代表取締役 CFO にもお会いしたいしお会いしますが、社外取締役にも必ず会わせてほしいというふうにお願いをします。で今まで、断られたのはお願いして1社だけ、他は今会ってくれます。多分我々は 5% 以上の株主だからだと思いますけれども、会ってくれます。それから親会社とか関係会社、22% 持っている親会社とかね、上場している、そこにもそこの担当の役員か社長に会わせてほしいって言います。会える確率は半分ぐらいです。で断られることも多いです。でいい事例があったら教えてくれっていうのがアリシアさんからあったので、これちょっと一つの事例として出してますが、ここは非常に IR の悪い会社で、アセットリッチな会社でした。で私ども3回株主提案しています。基本的には株主還元を増やせっていうのがメインです。でもう一つ大きなイシューとしては訴訟、ここは3件私どもやりました。それは社長の2人のお兄さんへ会社から払っている報酬なんかあって、これちょっと違法行為じゃないかということで、いろいろやって最後株主代表訴訟もやったんですが、最後の3回目の株主提案で、マジョリティ・オブ・マイノリティが我々の株主提案に賛成してくれたと。それから株主代表訴訟もやったんで、マネジメントバイアウトで、僕は我々うるさい株主から逃げたということだったと思います。ガバナンスを改善できなかったけども、投資としては成功したということだと思います。次はN 社って書いてますが、ここは麻生大臣がお帰りになって残念なんですが、株式会社麻生が大株主で、キャッシュリッチな会社だったんで、私は麻生大臣の言う通りでキャッシュをちゃんと使おうよという提案をすればですね、法人税を下げてお金をため込んじゃいかんよって麻生大臣は数年前ずっとおっしゃってましたよね。っていう提案をしようと思って、投資したんですが、ここは非常に立派な社外取締役がいらして、非常に珍しい、私が会った社外取締役の中で一番まともな人、社外取締役の役割をちゃんと分かっている人だった。その方といろんな議論をして、株主提案なんか 法律上の権利を行使することなくですね、会社の方から自主的にですね、株主還元を増やすとか、それから任意の委員会を作るとかですね、そういう改善を発表してくださって株価が上がったという事例であります。で、私がその日本企業の問題として思っていることはですね、経営者の皆さんが株式会社の目的が株主の利益の最大化であるということを理解されてないということ、場合によっては感情的に怒られる時もあります。そんなわけねえだろうと。でもそうなんですね。グローバルなルールではそうなんですね。日本だけ特殊で違いますと言われても、もうそういうことを言っても外人が全員売り逃げちゃうかもしれませんが、そういうわけにはいかないので、会社法の大学で使う教科書になって株式会社の目的は株主の利益の最大化だって書いてあるわけですから、それをちゃんと理解した上でやってほしい。だからステークホルダーのために経営しているから株主の利益を増やすことはできませんって本当に言う人がいたりですね、株価は市場が決めるもんだから私はそんなことに責任取れないという人がいたりですね、責任ありますよ、私に言わせれば。どうやって上がるかってですね、日々考えてほしい。それから中期経営計画目的何ですかって聞くとですね、答えられない人がいるんですね。株主価値の最大化じゃないんですか、企業価値の最大化じゃないんですかって言うと、ああそうですとおっしゃるんですけど、本当に答えられない人がいます。そんなことで、もう時間もないので、あと簡単に申し上げたいのは、政策保有株式については、私どもは持っててほしくない、持つべきでないと、そんなものを持って取引ができるというのは誤りであるということ、それから親子上場、これもやめるべきであると思っていて、なぜ親子上場が日本にこんなに多いのか、企業価値の最大化を目的に行われたものではないわけでありまして、社内の人をどうやって処遇するか、親会社の役員できないから子会社を作って役員にしてやろうと、そんな発想で作った会社が非常に多いと思います。で、すみません、もう時間なので、最後は、日本だけ GDP が増えてないと。で、この二十数年間、失われた二十数年間ですね。で、ただし大企業は純資産、自己資本は3倍ぐらいになっているということであります。だから日本の企業がもっと利益を追求していただければ、経済も活性化するんじゃないかというふうに思っております。すみません、時間をオーバーして。
Thank you very much, Maruki-san. I'd just like to add that if anybody is interested in this subject, I find Maruki-san's website very informative. He's very transparent. He has all the letters he's written to any of the companies, all the issues that he's fighting for. And I think, before I met him, I just thought, wow, this guy is really aggressive. And I think the reason he gets away with it is because in person, he's very charming and sweet. Sampei-san, may I ask you to continue on?
Thank you. Right. Thank you for inviting me for this valuable opportunity. Yes, briefly explain. Let me briefly explain about Fidelity. Fidelity is a bottom-up, fundamental research-oriented, active fund manager. However, recently, we created new capacity to offer our client passive equity with active engagement overlay. I would like to briefly explain about Fidelity's shareholder engagement approach. One of the frequently asked questions is, how has shareholder engagement changed through time? The first, the total number of engagement meetings increased more than 3 times in 3 years. Second, as shown on the left-hand side chart, long-term strategy in dark blue and capital allocation in light blue are the priority agendas to enhance value of companies. Also, both companies and Fidelities are becoming more keen on environmental and social issues in brown. Third, on the right-hand side chart, the more meeting requests come from the companies themselves, shown in dark blue. As they experienced the constructive engagement meetings with investors, I think they value the benefit of proactive communication with investors. They asked for our feedback, comments on the disclosures, if they are good or what are missing, where we see potential improvements. How do we use those information in our investment decisions? And fourth, these engagement meetings are held separately from traditional IR meetings. And those engagement meetings is run by me rather than investment analysts or portfolio managers. However, the investment analyst and portfolio manager join my engagement meetings. Also, another frequently asked question is how to measure success of the engagement and its time horizon. From the initiation of each engagement, we strive to make our progress toward desired outcomes measurable, traceable, and transparent to our client. These empirical evidence by agenda category are shown on this slide. Sorry, this is visible, too small, but as an interim measurement of success, we monitor their news release, strategic plan, KPIs as output from the companies whether they reflected our deep concerns, suggestion, or solution that we addressed in our engagement meeting as input. But at the end of the day, outcome is measured by corporate performance and share price performance. In case of proxy voting related agenda, time horizon, actually the above, the pink one, the time horizon tend to be relatively short due to the obvious voting deadline. On the other hand, the engagement agenda on mid to long-term strategy takes longer to implement, shown in yellow, typically 1 year or 2 years. Our philosophy of engagement is from value gap to fair value. We believe that key success factor of shareholder engagement as follows. First, rightly address the company's specific issues and how should it be solved on the basis of a long-term perspective and integrated thinking. Second, our goal is to improve its value creation power or close the gap and guide the company to realize its fair value. As a result, it is win-win for both company and shareholders. Third, continuous interactive loop of dialogue, feedback, action, and then dialogue is important. In my 14 years of shareholder engagement experience, I have learned that there are often misinterpretation or misunderstanding between companies and investors, even though we use the same words and same language. In order to avoid miscommunication, to share visible evidences, and to make a dialogue more effective, we prepare this discussion paper as an effective communication tool. In fact, companies often appreciate our straightforward comments and analysis with evidences. Actually, one company named this discussion paper as Value Creation Diagnosis Report. Then, since then, we used the name. And when they come to us, they expect to receive the report. The engagement process and method. As we pursue the most effective way to promote continuous fundamental improvements, we prioritize face-to-face meeting with management or independent directors rather than sending letters to the board. Only once in the past, we sent a letter to the board. Although we do not rule out the route to the shareholder proposals at the general shareholder meeting, it wouldn't be effective unless we make it public and collaborate with other shareholders. But we don't make our shareholder proposal public in order to avoid risk to be seen as agitation or acting in concert. Finally, our proxy voting policy. We do have our own proxy voting policy, and it is different from major proxy voting advisors. For example, we vote against election of the outside director when the candidate is not independent and the risk of the conflict of interest may exist. And we take our engagement progress into account in proxy voting decisions. This means that we sometimes override our proxy voting guidelines when we think it is appropriate to do so. That's it from me.
Great, thank you very much. Thank you very much, Sampei-san.